Welcome back to the channel. Today we're going to talk about something a lot of people have been watching closely, mortgage rates in the UK. And for once, there's a bit of positive movement worth discussing. Over the past few weeks, we've seen some lenders begin to reduce their mortgage rates, not across the board and not dramatically in every case, but enough to raise an important question. Is this the start of a wider shift in the market or just a short-term adjustment? In this video, I'll break down what's actually happening, why some lenders are cutting rates, and whether we can realistically expect others to follow. Before we get into it, if you're new here, make sure you're subscribed and have notifications turned on so you don't miss future updates on UK property, interest rates, and market trends. And if you find this video useful, a quick like really helps the channel grow. Now let's start with the bigger picture. Mortgage rates in the UK don't move in isolation. They're heavily influenced by expectations around interest rates, inflation, and wider economic conditions. One of the key drivers behind mortgage pricing is the swap rate market, which is essentially where lenders price in their expectations of future interest rates. When those expectations change, mortgage rates can move quite quickly. Over the last month or so, we've seen a lot of volatility in those expectations. At one point, markets were anticipating that the Bank of England might start cutting rates. Then, due to global uncertainty, particularly linked to energy prices and geopolitical tensions, expectations shifted towards the possibility of rates staying higher for longer or even increasing again. That change in sentiment pushed mortgage rates up quite sharply in a short space of time. To give you an idea, average fixed mortgage rates increased noticeably within just a few weeks. That kind of rapid movement tends to have an immediate impact on buyer behavior. Quite simply, when borrowing becomes more expensive, many people pause their plans. And that's exactly what lenders have started to see. Inquiries have slowed, fewer applications are coming through, and overall activity has softened. From a lender's perspective, that creates a problem. Because if fewer people are taking out mortgages, their business slows down too. So what do? They adjust pricing to stay competitive. And that brings us to the recent rate cuts. Some lenders have started trimming their mortgage rates slightly in an effort to attract borrowers back into the market. These reductions aren't huge, but they're noticeable enough to make certain deals more appealing than they were just a week or two ago. It's important to understand that these changes don't necessarily reflect a major shift in economic fundamentals. In many cases, they're a response to reduced demand rather than a signal that borrowing costs are about to fall significantly across the board. That said, it does show how sensitive the market is right now. Even relatively small increases in mortgage rates can put people off, and when that happens, lenders often react quickly. Now, another factor worth mentioning is the time lag within the property market. The house price data we see today doesn't reflect decisions being made right now. It reflects decisions that were made several months ago. Buyers who are completing purchases today may have secured their mortgage deals earlier in the year when rates were lower. Because of that, house prices don't always respond immediately to changes in mortgage rates. So even though borrowing costs have increased recently, we may not see the full impact on prices until later in the year. It takes time for those higher rates to feed through the system. At the same time, uncertainty is playing a major role. Global events, particularly those affecting energy markets, continue to influence inflation expectations. When energy prices rise, it can push inflation higher, which in turn affects how central banks respond. Right now, there's still a lack of clarity around how these factors will develop, and when uncertainty is high, both buyers and lenders tend to act more cautiously. For buyers, that often means waiting to see what happens next. For lenders, it means balancing risk with the need to remain competitive. So what does this mean going forward? Will more lenders start cutting rates? The honest answer is, it depends. If demand remains weak, there's a good chance we'll see further small reductions as lenders try to encourage more activity. Competition in the mortgage market is strong, and no lender wants to fall behind. However, if inflation stays elevated or increases again, that could limit how far rates can fall. Ultimately, mortgage pricing is still closely tied to expectations around the Bank of England's base rate. If those expectations stabilize or improve, we could see a gradual easing in mortgage rates over time, but it's unlikely to be a sudden or dramatic drop. Instead, a more realistic scenario is a slow adjustment, with rates moving up and down in response to incoming data and market sentiment. For anyone thinking about buying or refinancing, this creates a tricky environment. On one hand, waiting could mean securing a better rate if conditions improve. On the other hand, there's always the risk that rates move higher again if inflation surprises to the upside. That's why it's important to focus on your own situation rather than trying to perfectly time the market. If a deal works for you and fits within your budget, it may still be worth considering, even in a changing environment. So to sum everything up, we've seen mortgage rates rise quickly due to shifting expectations in the financial markets. That increase has slowed demand, prompting some lenders to reduce their rates slightly to stay competitive. These cuts don't necessarily signal a major turning point, but they do highlight how responsive the market is right now. Whether we see further reductions will depend on how economic conditions evolve, particularly inflation and interest rate expectations. As always, I'd love to hear your thoughts. Do you think more lenders will start cutting rates in the coming weeks? Or do you expect things to remain uncertain for a while longer? Let me know in the comments below. If you found this video helpful, don't forget to like and subscribe, and I'll see you in the next one.